All right, so breadth improved today. We had a little bit of a rebound, but it wasn't quite the rebound that we want to see. That's what I'm going to break down in tonight's market outlook preview. I'm going to show you, why the breadth looked as good as it did, and show you whether it was good enough, and what other signs of in terms of market breadth didn't necessarily support what we saw. I'll also break down the rebound we saw in yields and gold. Those were two asset classes that didn't do so well yesterday. They rebounded. We'll also take a look at semiconductors. Really important segment of a very important sector in the market, and see what it's telling us right now. A little bit of a divergence going on, so I'm going to highlight that. So let's go ahead and get started. Today is Wednesday, November 5th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Hey, before we get going too far, if you click this link right up here, that will take you to our market outlook page, our blog post, our free blog post available for all of our basic subscribers at Market Scholars. When you click that link, it actually takes you here. This is the blog post page, but if you're not logged in, this is what it looks like. If you're already subscribed, just click the login here, and that will take you to the page. If not, click this blue button. Will take you to our basic subscribe page. Just scroll down here. It takes a few seconds. Hit sign up, and there you go. Now you'll have access to the full blog post. This link right here takes you directly to the basic subscribe page. And again, it only takes a few seconds, and you get access to this every day. Remember, on Fridays, you get access to the full version of the Market Outlook videos. So make sure you subscribe there. All right, now let's take a look at how we did today. The S&P 500 rallying off of its highs. It didn't quite go up to its highs today, but it rallied up 1/3%. So nice little move higher, setting ourselves up for a good near-term bounce here potentially in the next couple of days as we end the week. If you look at the Russell 2000, it had a really good day. It was up over 1.5%. In fact, when you look at the ratio chart here of let's do the Qs relative to IWM, you can see that was a pretty significant move to the downside. It appears that it's all moving over to the downside, that the RSI is moving lower, the PPO is rolling over, the CCI is rolling over, the DMI is rolling over. So it all looks like all this positive move. And the difference here, though, is that if and when it does roll over, we're pretty darn close. Any break below the 200-day moving average typically is associated with weakness in the markets. And if that, we're pretty close to it. And you notice that as we potentially start to roll over, the correlation has been rolling back up to its normal positive correlation. So it probably won't be the best thing if there is. Like I said, it was pretty much a reversal of yesterday's move. Remember, gold was down big yesterday, and yields weren't so bad. They actually jumped. I pulled back a little bit yesterday. Big time jump today. So a big break of the 50-day moving average. And if I take a look at gold, it also had a pretty decent move here. Let's go to the futures contract on gold here, and you can see it had a nice little reverse. Now, it didn't get back above the 8-day, so it wasn't quite the reversal move that you saw, that completely reversing the move, to the point where we're back to a bullish trend. Remember, this is really important too, because gold, and Bitcoin for that matter, is pretty correlated with the S&P, with risk appetite in general. But going back over here, again, you can see that correlation. If I look at, let's see here, the other thing that changed yesterday was the breadth. If I look at the number of stocks above the 50-day moving average, well, here, let's first take a look at the New York, the advanced decline line. Big jump higher. So we're back to, after being at minus 1,000 yesterday, we were up to positive 1,000 today. So that's one of the bigger moves. Didn't quite get up as to other levels that we saw. For example, when we were coming off of this low point, we're at 1,600. Coming off of some of these other near-term lows, we were over 2,000 there. We got, a little bit higher. We got up to, about 1,300 there. So after all these other near-term lows, we bounced up to 1,700. We bounced up with really good breadth. This is, if we're bouncing off the low, that's not enough. 1,000's not enough there. And the other thing too, that didn't support the move is the number of stocks above the 50-day moving average bounced up, and got back above 200, but barely, and nowhere near this moving average. So not quite the rebound in breadth that we'd really want to see. And then finally, again, if I take a look, one more ratio chart here, how semiconductors are doing relative to the rest of the technology sector. And you can see this is highly correlated with risk appetite, 89% positively correlated with the S&P 500. It's still rebounding. So, after a down day yesterday for chip stocks, they rebounded pretty sharply today. That's the leadership you want, right? That's what's obviously you can see strongly correlated with markets. We're well above moving averages. You can see if I were to zoom out on this for some context. The PPO is not as high as it's been in 2024 when we got that significant divergence there, higher highs with lower highs, and that led us into a pretty negative down rest of 2024 into the correction and washout move here in February and March and April. So we had a pretty significant divergence there, not quite to that point here necessarily, and you can see the PPO didn't get as high, but the PPO is falling while the ratio continues to move up. So, a little bit of a divergence potentially setting up from that perspective. You can see the positive DMI also really coming down as the ratio continues to move higher. So again, slight little divergence there that we need to pay attention to, that that in terms of like if and when, because it will at some point, this oscillates, so it will at some point rotate down. When it will, nobody knows, but that's a small little sign that suggests that it might be a little sooner rather than later if this divergence doesn't rectify itself before it plays out with a negative pullback here as it potentially drops below. It only dropped below the 8-day moving average yesterday. If it were to drop below the 8 and 17-day now, then you can see that would be a little bit more telling. So a rebound today, but not quite a complete rebound, which sets us up for the next couple of days. And in the full market outlook video, I break down kind of what my expectations are as a result for the next couple of days going into next week. So that wraps us up for today's market outlook preview. If you want access to the full version of the video, click this link right here. That takes you to our Market Outlook Foundation page. You can subscribe there for our service. It's just $29 a month. You get access to every single Market Outlook full Market Outlook video, 30-minute long video every day. Lets you know what's going on in the markets, what I expect will happen, breaking down all the technical indicators, all the different intermarket relationships, sector rotation. So I break all that down there, as well as give you a trade idea at the end of every video. So you get access to all of that. You also get access to our Market Outlook Live video, where we place the trade in real time before the market closes during our live stream class at 3:30 Eastern time on our website. You also get access to our Market Outlook Live Trade Tracker, where we actually track the results of those trades. Because not only do I give you the idea during the Market Outlook video, but we also, in the Market Outlook Live, manage those trades all the way from start to finish, which I believe is probably, the finish is a lot more important than just the idea is, as well as tracking the results of that. And again, you get access to all of that for just $29 a month, or a little less than $1.40 per video if you subscribe for our foundation tier. Again, thank you very much for watching. I appreciate your time tonight. Follow me on Twitter at DavidSettle42 for more content between the videos. Subscribe, as I mentioned earlier in the video, subscribe to our site for free so you can get access to our Market Outlook blog post every day, and you get access to our Market Outlook video on Friday, so you have that to watch over the weekend. So check that out there. Again, remember, you don't get the Market Outlook Live on Friday, so you won't get the trade idea until after the market closes on Friday. But at least you get access to that videos, but only if you're subscribed at least for our basic tier, as I mentioned earlier in the video. Subscribe to our YouTube channel, like tonight's video, comment on it, share with anybody else. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.